Graham asks, I can go a couple weeks doing well, sticking to my rules and processes. However, one of my processes is to try 3 attempts to get into a valid setup and then stop. On occasion, I find it difficult to stop. End up fighting myself, fighting the market, which I end up losing more than I gained. I know it's an internal problem. Is there anything you can do to recommend to stop limit this behavior from happening? I would start to journal during those sequences. Obviously, well, maybe not obviously, but typically what's going on there is, you have, let's say, a zone that you're bearish from, right? And unfortunately, as the market will do from time to time, it gets messy in the sequence, right? It comes up, it turns, you get short, you think you've nailed it, and it comes and then just wicks that, and you think, oh, I got stopped out. Let me re-enter. It's still valid, right? Oh, it's working, right? Maybe you put a stop at like, who knows what you do there, right? Some people put it at break even. Some people put it above where this little consolidation broke down. Either way, guess what? It got you and it just turns and there's a bunch of selling. So guess what do? You get back in, right? There's your third shot. And then as we know, it could get even worse from there, right? Market can do this. And maybe you think it's long now, right? And then that fails and you just reverse to short. Like, trust me, I know all too well what that kind of a sequence feels like. One thing you can do is get better. Okay, great, Merritt. I'm really glad I showed up today for you to tell me I just need to get better. But in all seriousness, get good. Um, in all seriousness, you can get better at maybe something like order flow, maybe the timing of your trades with what we call rhythm, shifts in momentum. You can start to see the market a little bit better. You can start to see areas where it makes sense that there could be a stop run and you don't get in front of that. And so you can save losses essentially by getting better at some short-term entry skills. That's one thing you can do. And I know that's not a direct answer to your question, but I just wanted to mention it. Let me get direct to your question real quick because I could talk all day about sequences like this. Let's talk specifically about having a rule and breaking your own rule. Number one, as I alluded to a second ago, I want you to start journaling throughout those sequences. I want you to pay particular attention to your motivations behind an entry. What is not the reason from like a technical rationale for an entry, right? Like a pattern or a setup or whatever. I want you to write down why you're putting risk on here from what is motivating you. Okay, so what I'm trying to move you to is from trading around perhaps very common things like an ego, right? A need, a fear, right? A want, things like that, which very often happen in these areas. Let's just put a very common one here as well. P&L. Oh, my P&L is not what it was earlier in the day. I've given back gains. I'm going to keep pressing here because, again, what are you going to journal? What are you going to ask yourself? What is my motivation for this next trade I'm about to put on? What is the motivation? And if the motivation is lost P&L, you've got to find a way to grow up, right? That's how I like to look at it. Not trying to be too harsh with you. And try to be a professional, a professional here. Try to be a real trader, not an amateur. I sound like I'm being a jerk here, but I'm just trying to like give you some stuff that might help motivate you. Needing to be right? The ego component. is a big one. Note if you're saying, note if, like, are you mad at the market for what it's doing to you, right? That's typically a sure sign that there's ego involved, that you have some needs that you're trying to express through trading. And that's not what trading is about, right? So the other side of things, right, with trading is process, you know, risk plan, right? So you're violating a risk plan. And does it meet process? Does it meet a risk plan? That's, do I have edge here within the confines of a risk plan, right? So Graham says he gets mad at himself for breaking his own rules, and then he just goes, off the reservation. Well, as some people have alluded to, you can at least, okay, let me give you this. You can at least put up some bumper lanes. There are certain data feeds, not all of them, but some data feeds, some brokerages that will say, hey, we can put a daily loss limit on your account. We will auto liquidate you and your account will be locked until the next day when we unlock you or whatever. Right? So at the very least here, no matter how much of a monster I might be or you might be at times, we can put guardrails in place that prevent us from doing something more than, let's say, 110% of what we would like our daily loss limit to be, something like that. So anyways, there's some really good practical advice around journaling, getting to know yourself better so that you can improve your trading by understanding your motivations. And number two, some guardrails that you perhaps can put in place there as well. All right. Sasikant says, hey, Merritt, when moving from 2 lots to 4 lots, say risk per trade is 600 for those 2 lots, does your risk per trade become 1200, or is there another way you bump up people's risk instead of just multiplying risk per lot times number of lots? Usually it's the other way around. Usually someone's been working with a particular R value, right, risk per trade of 600. We want to incrementally bump up that R value, okay, because we don't know trade by trade how many lots you'll end up trading, because that's a dynamic process. If you're actually using something like what we call an R value, right, which is, simply a dollar risk, per trade, then what you're doing is you're saying, okay, I want to get long right here. My stop is here. My R value that's been decided upon first, right? And it can be relative to daily loss limit, right? Sometimes people want to say my daily loss limit is this based on account constraints or who you're trading for constraints, right? So a lot of times it starts with daily loss limit. And from there, you back into risk per trade, depending on how many number of trades you need per session, right? Some people only need 1 per session. They could risk all their whole day on 1 trade. People like me, I tend to like that kind of like give myself 5 or 6 shots a day. So I'll take a 5th or a 6th of my DLL, and that's my R value. So, but from there, when you have an R value, you then, in order to figure out your size of the trade, you need to say, what is the distance from here to here, from potential entry to stop out? And based on, like, for example, if trading the S&P and it's 1250 a tick, $50 a point per contract, and your stop is, 5 points away, well, $50 times 5 points is $250. So that per lot, you're looking at $250 of risk. Let's say that you had a $750 R value. Well, then you're going to trade a 3 lot. So it's not about doubling up your lot sizes, Mr. Perry. It should be more so about where do you want your R value to be at? And then on a trade by trade basis, having the tolerances, obviously, to put the number of contracts on that you need to target that targeted risk. Van says, hey, Merritt, I have 62 grand in reserved margin, but my one lot NQ order keeps getting rejected by the RMS. What am I misunderstanding about how, are you in the tryout, Van? Is that what you're saying? Is that like a tryout thing? Definitely shouldn't happen, right? So, I mean, I can't tell you. I don't know what the margin is for NQ right now. I think S&P's what, 12,500, something like that. Does anybody know? I mean, it's not 62, so definitely shouldn't happen. Just email us, and we'll create a support thing. We'll hop into it and take a look. But that it's just not what we want to do here on this Q&A. But sorry for the problem. We'll definitely take care of it. And include on the email exactly what error you're seeing, that kind of thing. Because a lot of times it'll actually list the numbers. It might say like, you have this much, but you're trying to put on a trade of this much. Yeah, it should only be about 15K. That sounds about right, Nick. Okay. I actually answered that question for Sasikant on the other, when I was answering his other stuff accidentally. Taylor says, you mentioned yesterday in an advanced NADRO trade to get in short after the failed bull move above the line in the sand. Is that something you'd be up to describe for us? Yeah, sure. I'll just draw it out a little bit because I remember it fairly well. So typically there's an area at which like this market is essentially in an uptrend, right? And what it started to do was to really flag, right? Which is a bearish pattern, okay? So it started to flag, and not only did it start to flag, but the buyers got really, really aggressive trying to push this market higher. And there was a passive seller that was really capping us off. Once I got a shift in momentum out of that flag, with the combination of all those things, with the combination of the fact that I was technically, well, I take that back. I had actually tried a few longs once the level broke. So we were above the level. But on some higher time frames, as I'm sure you know, Taylor, we were still essentially bearish, right? Nothing had really changed. So with all that put together, I took the short for those reasons. It was more of an order flow read, a price action pattern, a weakening of momentum. Those things added up to, you know what? Let me go ahead and put this on in an aggressive way. And, if the imbalance would have held and buyers would have responded and things like that, then guess what? I'm going to scale quickly. I'm going to scratch, I'm not going to stick around and get run over in that situation. Right. But what happened is we dropped like a rock, so it just, the harder I work, the better I get, the more lucky I get with stuff like that. Christine says, is there an easy way to exit one contract with the click of a button where price currently is when using a strategy that gets you in with two contracts and you want to exit one where, oh, this is quite the run-on sentence, Christine. I can't comprehend it all. With two contracts, you want to exit one where price currently is without moving the target to where the price is. Thanks. Whew. So what I do, I'm just messing with you, Christine. What I do is I have hotkeys, and if I do have targets with like OCO, like bracket orders, then they will automatically adjust to what I'm about to tell you. So I have a setting on in Sierra that says something like allow scaling out, I think is the setting. You just check it within a trade window on the menu. And if I'm trading two lots, I'll have pressed Control-2 for my size to be 2, and then I'll have banged into the trade. And so now we get to the point in question here. Well, all I have to do is with my hand down on the left control button, press 1-. That's all I have to do. Change my contract size to 1 lot, sell 1 lot right now. My stop loss and my take profit are going to adjust down from 2 lots to now 1 lot because I've scaled out of 1 lot. And I got the trade exactly where I wanted immediately without having to fumble around, get my hand to the mouse, find out where the mouse is across 4 32-inch monitors, move the mouse to the right place, click the one lot button, click the sell button, right? You cannot compete with me in terms of hotkeys with a mouse. You can't do it. I tell people this all the time. Figure out hotkeys because it's vastly superior. So anyways, that's how I would do it, Christine. I'm sure there's other things you could do, but that's how I would do it. Nicholas says, risk management. How do you handle daily risk during sustained drawdown? How much do you reduce total risk? Wonderful question. Everybody wants to talk about making more and all the sexy stuff. But Nick here coming in, asking the tough questions around, you know, how do we handle rough patches, right? And this is one of the most important things a trader can learn to do. So I'm sorry in advance, I don't have a formula for you, but I'll just tell you what I do know. I know when I get to the point where I'm either mentally frazzled, I'm in a significant drawdown. We're talking, let's call it 15 to 20 R. Okay. So we're really sucking. And I can't seem to find the answers. My win percent has plummeted to, 15% over the past 30 trades. We've got problems, right? I'm the frazzled component I should return to. Maybe that is, I'm not sure as to whether something's changed in the market. I'm not sure whether this is my fault, or I may have a really good read on it. If I'm not sure, but something seems different about the market, I am trading what appears to be well, according to my process, right? Not outcome, obviously, but I'm trading well. I may not reduce size that much. I may continue to just really study. Maybe I get back and through use of statistics and things, find some bright spots, right? And go focus on those things that I'm doing well, things that the market is actually giving up. Maybe it's there's so much context here, right? What if I've gone from my normal, like what I consider my stock trading these days, which is like, I shouldn't say stock trading. That sounds like I trade stocks. My standard game plan, which is look at a dozen markets, figure out where there's the best narrative and go put on the best trades I can there. I may, as have been recently, trading a lot of S&P, right? I've been trading a lot of just S&P day after day because the moves have been so good. There's been such good opportunities, volatility up. So there's context there too. What have I been doing? Have I been just kind of scalping for a few days and I'm realizing that I'm absolutely sucking? Well, maybe it's an easy move to let's get back to like our standard trading model, like normal stuff. Have I been trying to do other things? Let's get back to what works, but if I've been doing standard stuff and I'm really doing poorly and I know that it's my fault, I will take drastic measures. I will do anything, including go down to trading like, a 1 or 2 lot, just like get size as small as possible. If I'm really, really down in the dumps, I think psychologically even, I might even start to alter my trade management to just start to put up some green days. Instead of taking a big narrative trade for a big win and really risking the open P&L, and stuff, I might take a scalp across some kind of value area that I look at and call it a day, just book a decent, 2-hour day and be like, great, let's try to come back and do this tomorrow, but that's under extreme situations. So I don't have formulas for you, Nicholas. I can't tell you if you do this certain threshold, then you cut by this percent. I honestly don't have that. And maybe that's a flaw in my trading, right? Maybe I should be more systematic about reducing risk during big drawdowns and stuff like that. So Um, uh, would me taking those quick profits be an emotional crutch? Absolutely. Absolutely, Jamie. It's yes, it is. But at a certain point, I said at the most extreme bottoms of, upsetness with trading, I think there are places to make exceptions of just like process, right? But that's rare. It's very rare. But cutting risk is a good thing to do if you reach certain drawdown thresholds and you're throwing your hands up in the air and you don't know what to do. But again, it's all contextual here. What have you been doing? Is there anything that is working? How is your performance relative to what you're trying to do? Are you over there going on tilt every day? These answers to these questions are going to lead to very different what you're going to do with your risk. Maybe you put yourself on the demo, right? I know that I've done that many times, right? Maybe you go to the demo and build up a little, start to get your confidence back a little bit, start to prove that you can go execute like you're supposed to and like you know that you can. So hopefully that helps. Marwin says, hey, Merritt, how do you manage important economic data releases like unemployment, FOMC, et cetera? Do you consider the narrative is more important than these events? Is it better to close all positions and reevaluate? So for me, the number one thing that, that we have multiple kind of systems and processes that we use as traders, as traders who know what they're doing. What's the number one umbrella over all other systems and processes? What is it, guys? What is something that we cannot mess with? Antonio nails it. Nick nails it. It's risk. Okay. So to me, a major econ event, a liquidity event brings about certain risks that are not digestible. Okay. So unless I'm in a position that has gone a considerable amount in my favor, we're talking like, you know, half of an ATR, so I don't use that kind of thing. I'm just trying to ballpark for you guys where I might feel comfortable, right? A full day's range. Like it's really in profits and I have taken scale outs and reduced my position size. Then I will give myself the ability to hold into a release. I held into one, I forget what it was, either FOMC or NFP last month or something. I don't remember. Anyways, you can do it in those situations. But if you're just getting into a trade and price is right around your entry price or something, right? It's not really gone tremendously in your favor. You've not scaled out for profitable scales. You got no business holding into those things because it's a coin flip. It's a coin flip, you know? You're either, and a lot of times on the negative side of the coin flip, we're talking slippage, we're talking bigger loss than you may have prepared for, it's just not worth that. Stand aside, reassess, let the news shake out, but a lot of times news will shake out in both directions, and then if it's a high conviction trade that you really, really want to be in, just jump back in. You don't even have to have your normal setup criteria. Just let the news release shake out a little bit and then boom, hop back in. Maybe there's a slight position size adjustment if it's a worse price, unfortunately. But either way, that's kind of how I approach it. How would you handle Christopher says, how would you handle only having the ability to trade 2 lots? I mean, I can't tell you like specifically what to do, but for me, it depends on the individual trade setup, right? Depends on the context, depends on the trade idea, what it is. But 2 lots is no problem, right? For me, more times than not, that's going to mean I have a scale out and I have a runner for like a main target of the trade, very simply. So whatever you use to do those type things, just do, you know, if I mean, obviously you're not an all in, all out trader, else you wouldn't be asking that question, because all in, all out doesn't matter if you're trading 1 or 100, doesn't matter. It's the same thing. So if you are scaling out, then if you're only trading 2, scale 1 out. I'm going to use something like, for my students on the call, I'm going to use rhythm. I'm going to use DVA. I'm going to use perhaps one of those confluent with something like a minor destination. And then the second one, I'm going to really, give it a chance, right, against my stop to complete the narrative move, the likely destination that I'm looking for, like DMI based things, um, unless we're trending higher and all of a sudden the order flow falls apart, the trend falls apart, things like that, then great, I, I'm out of the trade, so I give myself discretion around managing that core position as well. But yeah, that's how I would do it. And, honestly, once you get to like 2, especially 3 lots, you're kind of there, guys. It's not really like, the ability to scale out 10 times is that important. I really don't think it is. I end up doing that a lot of times on like trades that just really run and stuff. But I don't have to do that to trade well. And sometimes I don't do that. You could trade the rest of your life in 3 pieces, You got 1 early scale, 1 intermediate destination scale, and 1 kind of runner core position for the big target. And you have trade management schemes that you apply to that. You can make a career off trading in thirds. You do not have to continue to break it down, or there is no like massive advantages to being able to break it down with more size. Jamie, our standard way of hiring traders is either through people from our community that we give, offers to just join through like a hiring class onto the desk, or the tryout. But if you're really convinced you've got the data, and we can verify it, then feel free to send us something. But I have no promises as to what we'll do with that. But our email address and contact info is all over our website. Just find it there, guys. All right. Great questions as always. Literally every time we have this meeting, you guys bring the goods, and I hope I deliver for you and give you some value. That is the goal, to help the community however I can. So anyways, hope you found that today, and we will talk to you all next week. Cheers.